Share. Hello, everyone. Yeah, I tried. So today's agenda is that okay, the agenda is like that: stock index, interest rate, the currency. Now the interest rate is the course a core indicator of the currency depreciation or revaluations, and also affecting the currency, affecting the exporting companies. And politics and monetary policy is the the currency, the reflection of politics and monetary policies, and also give you some sector performance, and I think give you a model portfolio performance. The stock picker financial screening investment strategy is the core of today's session. Let's see some index performance. And we can topics is like moving like that. This is the end price of September 30th. Is now currently exceeding 48,000. It's now 10 rising faster for after the October 1st. So in the US denominated performance, it's like that. Topics is the STI is most performing stocks, and also topics is next of the topic small with the next of the SDI, and S&P is almost middle of the performance. This is the relative price of all the index relative to the S&P 500. Nikkei is below the topic performance because some of the style like topic score 30 or large 70 is underperforming the small and mid stocks. It show you more detailed statistics. It's like that in the periodic return. I segmented all the return or last 12 month return in the quarterlies. This is below the this is upper low. Upper column is pricing currency, and the lower column is the USD denominated returns. It's very interesting that even in the Q4 2024, topics exhibit a positive return in 5%, but in US denominated, it's turned to be a minus negative of 3.65 returns. But in the core 30 is performing, it's a largest capital market cap stocks. And small and mid and all Nikkei is also underperforming. STI is performing well. But in the third quarter of 2025, it is the pricing currency return is more sort of positive, but the small and the mid is performing performing better than the core and large stocks. And also, but the return is mitigated by the Japanese JPY depreciation because USD return is somewhat mitigated. So let's see the trading performance. The 3 months return, this is 9%, 6% is in the third quarter return 2025. But in the trading 12 months return, the core 30 stock is performing well, but the small and mid is performing well. So but almost most of returns are upper more better than in the US dollar denominated returns. So the JPY stock, US JPY depreciation is affecting negative for the Japanese stock return in the USD term. So the periodic risk is like that. It is interesting that in the third quarter of 2025, standard deviation of the return is called the risk of the stock return. It's relaxed in compared to 2025, and also it's also appeared in the S&P 500. It's very surprising and very interesting because it may be some reversion to the normal level of the risk compared to the 2025, second quarter of 2025, raising risk of the, well, maybe it is the second quarter of the 2025 risk may be replicated in the fourth quarter because of the lot of turmoils in the US government shutting and also the government changing of the Japanese prime ministry. So currency is like that. JPY is also depreciating, but SDG, Singapore dollar is also could move like that way. So this is, but so the US JPY and SDG Singapore dollar is appreciating in the last quarter, but in the end, but Japanese yen is even faster depreciating and likely to touch in the 155 and it because currently in the 152 JPY against USD, it's depreciating trend. So yield curve like is even fast steeper. This is a yield curve of the selected date. In 9:30, September 30 is like in the current yield curve is in the 30 years bonds is steeper, more rating yield compared to the first date of the 2025 and also at the end of date of September. This is maybe a reflection of the government JGB credit risk and also for further long-term risk of the Japanese economics. So we turn to the economic overviews, politics and monetary policy. Sorry, I not cover diplomacy. I planned, but I can't do that. I'm very sorry for that. Let's see the politics overviews. The change of leader is the notable change of the Japanese politics. Ichiba Prime Minister announced the resignation on September 7th. Sanae Takaichi elected as the new governor of the Democratic Party in October 10th. Probably first female prime minister in Japanese history, but it depends on the result of prime minister election. It is a very small probability that Ichiba is continuing to sit on the prime minister, but it's really low, right? It's likely that Sanae Takaichi will be elected in the next prime minister, but how the coalition will be like that is also unsure about that right now. So manifesto policy is an expansionary monetary fiscal policy, gasoline tax cut, subsidiary for small and middle business, and tax benefit for household. But show some caution for consumption tax rate cut. This is deadly policy that it may be more faster degrade the Japanese yen and also raise the policy rate and also for not policy rate for long-term JPY bond, right? So market influence is that she said the BOJ is full if they raise policy rate. She is one of the political force that to force the BOJ to continue quantitative easing and low rates and delay rates rate expansionary fiscal policy depreciates JPY against USD. This is why JPY is depreciating too much for recent days, and also maybe but the Japanese new female leader may be positive, and also depreciating JPY is compensated by the raise of by the appreciation of the exporting companies' stocks. So the Nikkei is appreciating right now. So BOJ policy in summary, it's current policy that keeping policy rate low or purchasing amount of JGB will decrease at plan. The ultimate CPI inflation above target rate. Underlying inflation, they say that the underlying inflation is still below 2%, or there the deflation risk is still continues. Corporate investment and capital expenditure are reported as sound and growing, where capital slackness overserved. It's made that there is a lot of accumulation in the invested expenditure and some invested capital, but the capital is not fully utilized. There is slackness and working slackness, which identified as a risk of deflation. They see that some sort of tightening labor market and the slackness of the capital. I explained the following slides. News is that the ETF and lead hold in the BOJ plan to sell at the 330 billion JPY per year, but it almost takes 100 years for full disposal. So this is they're very careful about market impact. This is the amount that not influence the Japanese stock market and REIT market. Let's see, this is CPI inflation versus underlying inflation. We see that the CPI and core CPI is the general indicator of the growth of the CPI and core CPI is a general indicator of the price index. And the price is in the deflation trend or in the deflation trend. The core CPI is back into the some declining trend, and also, but they are still above targeted 2% level by year on year. But they cited underlying inflation. Underlying inflation is a combination of trend mean, weighted mean, and the modus of the CPI, also the price index of some selected goods. Trimmed 10% of good, 10% or upper 10% and lower 10% of the deflationary goods. So, but they not disclose what the criteria of choosing this, how they summarize and how they calculate what is actually the underlying inflation, underlying price level by utilizing this combination of these three index. So this is some we see that there is some discretion of choosing these three index to judging that underlying inflation is still below or upper 2% or not. So there's a labor tide and capital slackness. This is the capital input gap in the orange, and labor input gap is gray. The negative means that the capital negative gap means that there is slackness. The positive gap means that it is tight and it's in the shortage. So the labor is still in the shortage, and the capital is not fully working. So there's the output gap is the sum of the capital input gap and labor input gap. And we see that the shape is lagged but different, but shape is similar in the core CPI. So there's a lag indicator or even a predictor of the core CPI. So there's a capital slackness period may followed by the lower CPI deflation trend. So they see that there is risk of deflation, but it is so. But there is surprising that even in the core CPI touched the 4%, there's a slackness of the capital input gap. So market expectation change of BOJ policy is that there's a 48.29% of the policy rate raise expected in the end of September, but currently there is a 19.31% of the market participants expecting the policy rate raise at the end of October. So, and this is the number of the expected policy rate change in the next 12 months is the orange bars. There's only very few next 12 months. So this is not touched to one times. So even in the next 12 months, there's a few probability that policy rate raise in the BOJ. So let's see about the Fed, the US FRB, Federal Reserve Banks. So at the end of the September, markets see that 100% of the policy, the negative rate, relative percentage rate means that the policy rate decline, policy rate drops, the policy rate cut. But they are more or less confident about policy rate cut at the current October 6th. And the next change of the policy rate change, times number of policy rate change, expected number of policy rate change is also less confident for these days. So inflation persistent in US is one of the reasons that we see that the core CPI is above percentage, but almost near the 2% level. So inflation is somewhat relaxed, but we see that the PC rate of the service is above the targeted level. It is persistent. It is surprising that the non-durable goods is below the target level, and this is very fluctuating. But the goods, general goods PPC deflator is almost 0% inflationary level. This is surprising. So I'm skeptical about the Fed may or may not rate cuts, but the inflation on service while stable goods price change. The strong USD needed for keeping purchasing power and stable goods inflation. And the service cost inflation is persistent. So the US Fed, the Fed's policymaker may see that the strong USD is needed for keeping purchasing power constant, and also setting the inflation cost to moderate inflation. So the government shutdown effect is also being considered. So negative effect may be temporary, while latest cut effect long-lasting with lags. So if the government shutdown may affect negatively in the GDP, but it may be temporary, and the monetary policy effect is being effective with lag. So no immediate compensation for government shutdown effect. And so Fed policymaker see that the modern monetary policy is no longer a business cycle adjustment too. So if there's some negative effect may be expected in the government shutdown, but they may keep policy rates and with no data, and they may not decide without data. So JPY may first depreciate this. Market is sure about policy rate change by BOJ. Expansion policy is one for inflation adjustment, but policymaker and public supporting it. Market is still relatively confident about latest cut by Fed, but I see it's possible to defer beyond October FOMC. Delayed latest change of both BOJ and Fed may devalue JPY further. So my investment policy suggestion is that some slackness of the. So let's see again that the slackness of labor. So the capital investment for by the corporates may grow in further, and labor and some of the utilizing of the AI may be supplement for the labor market tightening. So and this is supported by the growing change, the depressing JPY is also supporting the exporting company's stock price, and also supporting fostering the exporting trend. And so the corporate investment is growing further, corporate expenditure growing further, but because of the depressing JPY, the normal consumption by household maybe slow down or being tight. So we have to change the investment policy so that more concentrate for the corporates and B2B business, and also for some focus on the labor market. So let's see that some sector overviews. This is the overview of the sector performance. This is very the Tokyo Stock Exchange created a 33 sector index, and they also put into the 70 sector indexes so that to invest, so that the index creates the ETF for some index fund for the selected stock market, selected sectors, and this is BNK. Most performing is the banking sector, while the financial sector of non-banking sector is in the middle, and topics is in the middle of and the pharmaceuticals, and also some this is the raw material chemical is underperforming sectors. Let's see that the exporting sector performance of exporting industry. So we see that in annual 3 years, average return is 80.70% in electric price and precision instrument. This is inclusive index of for semiconductor industry. This is appreciating too much, but in the last 12 months, this is depreciate. This is some depressing trend. So the last TTM is a trailing 12 months. So trailing 12 months is underperforming than the 3-year average returns. But in the 9 months and last 6 months is in a recovery trend. We see that in the 8.52% and 8.06% in the last 2 quarters. Transportation equipment is automobile industry, including sectors. They also are below the 3-year trend, and also there's a lot of because of Trump tariff, there is underperforming in from the fourth quarter of 2024 and also first and second quarter of 2025. But it's recovery because the Trump tariff decided that automobile tariff is 15%, then expected 30% front tariffs. Machinery is also in the recovery trend, and it's very performing because they're including some defense force or some armory stocks, like some heavy industries. This is recovery trend in the second quarter, and also is growth trend, and also stable 8.40% in the third quarter 2025. So the sector performance, bank and finance and internet. Why I include internet is that some of the internet services having the banking industries entering into industry like Rakuten, and we see that the banking sector is performing better than the last 3 years average returns in the last 12 months. Finance, non-bank finance is middle of the industry, middle of the return, but it's fair. So the third quarter 2025 is appreciating because of the BOJ may write the policy like this, but it may be maybe reversing because of the policy rate delay in October. If not latest rates, conducted in the late of October. So let's see the materials. This is underperforming sector in the raw material and chemicals. This is also some form of the raw materials for the semiconductor is also included in this. This ticker is not right. This is RMCW and also non-steel chemical. I'm sorry for that, but the construction materials, non-steel iron is also performing well in last 12 months. This is fairly rising because the uh, because of the Trump tariff is reversing to the more lower tariffs than planned in the first quarter of the 2025. So construction is also rising because of the shortage of the raw materials for constructions. Let's see the sector performance infrastructure is like that. Transportation logistics is also performing better than 3 years average. Real estate is also rising. Electricity and gas also is performing less. And also energy resources is surprisingly lower than the 3 year months. It is surprising that the electricity is required of data centers, but and also energy consumption is increasing in Japan, but reflecting a stock market. So, but in third quarter of 2025, it started to be reflected. So it may be in a rising trend if the data center construction is going further in the fourth quarters or the further years. So some defensive goods and consumers is like that. Pharmaceutical performing bad, and there is some room for the mean reversion, but it's been performing bad. Even in the second or third quarter, it's performing bad. It's reflecting the fundamentals of the pharmaceuticals. Financial is performing not good, and the food is also performing bad. Some of the food industry can reflect the inflationary cost of the inflation cost to the end price. So retail is also performing bad in the third quarter of 2025. So wholesale industry is surprisingly performing well in the third quarter of 2025 because some remarks about the Berkshire Hathaway's investment chief that there is a pressure for the stock returns, shareholder returns for the investing in the wholesale trade companies like Mitsubishi and Mitsui or Itochu like that. So let's see that some model portfolio performance of my selected stocks. The model portfolio is like that. The goal is active investment strategy with topic performance. The constraints 5 million JP budget and about concentration with diversified portfolio and long onlys. JP gross profit margin is 50%, more than 50%. The operating margin also more than 20%. ROIC spread, return on invested capital minus capital cost is positive. But I break this rule for choosing more prospective stocks at the first of the 2025. The other consideration, prefer domestic markets and exporting company, and also some expectation OPM, operating profit margin criteria, and the ROIC spread. So current stock selection is like that. Japanese Exchange Group is stock exchange market. This is stock exchange and Capcoin gaming company. Chugai Farm Peptidream Pharmaceuticals. Advanced Test is a very prospective tester on the semiconductor chip. SPI the security and commodity futures, but also they're investing in the equity investment for the regional bank of Japan, and also InSource is a consulting company, and this service and software as a services. More the retail trade, it's like an Amazon style commodity, like internet supply, internet retail trade, but they are mainly selling for the some enterprise or some small or mid and small businesses for some materials of the like nail and some bottles or some construction, some utility materials. So though it's the fashion, this is the text. This is the fashion, or I mean that this is some clothing retail trade, internet trade, the first clothing retail of in Japan. Any current cover is this is the talent management of the YouTube battle YouTuber. It's called VTubers. There's a similar sales growth. The sales, the cover is newly IPO later than the Anchor, so no TTM sales growth, but the operating margin, gross profit margin is similar, but the operating profit margin is less in cover. So ROIC is very prospective. There is a 32.9 ROIC spread against the weighted average cost of capitals. So there's a stock peak performance. I'm very sorry that most of the peak stock is underperforming and very low performing. There's a pharmaceutical firm with tracking our legs, and JPX is not good. So good performer is Advantest and SBI Holdings, and Anchor is also performing well, but Kava is not performing good, or even less, even depreciating too much. Their stagnating trend is because of their profit margin is not improving, and also some trend is resigning, so terminated contracts. So there's some popular talent of the VTubers, and those may be because the macro trend of the suppress macro trend of the consumer consumption, lower consumption trend. So we see that the model portfolio return is right in YTD return. So it's relatively below. If you invest in the 4.7 million, 4.7 million in the first of the either 20th December 20th, it's going to be a 5.3 million in the end of September 3rd. It is very good return, but it's below the topics. So if we extend the investment horizon back to the first of the third quarter of 2024, it starts the same portfolio at the 4.4 million invested in the first day of October at the enterprise, and it should be if you invest in the same timing at the topics at the same amount, it should be 5.2 million or 5.3 million at the end of September 30. But it is very slight change. So our recent financial result is like that. There's some sales growth in most of the company except in the pharmaceutical selected stocks. It is not unforeseen recovery, so I sure to omit these two companies in the next. I'm planning to omit these two companies from the first of the 2026 selected stocks. Capcom is growing well, but its net income is decreased YOY, and also see that the Anchor cover is also growing well, but Anchor is growing more, and cover there's no operating profit margin improvements. I see that some logistics center may focusing that they introduced a logistics center for selling goods, but then the improvement of profit margin not observed in the last quarter, and Zozo is also profit margin is decreasing. SBI is also prospective growth of the sales, but they're investing in the investing in the financial market and the regional banks of the Japan. And the regional bank of the Japanese regional bank investing too much on the long-term JGB or Japanese government bond. I, I will first research about the balance sheet in this quarters, and I decide if I should omit the SBI or not. So let's see the stocks picks of the for new model portfolios. We see that some strategy focus and stock selection criteria. AI and data center is still important for strategic consideration, and also corporate cloud and services. I said that in the last slides, there's a lot of investment by the corporates. So for compensating for the tightening labor market, so human resource and labor market is also important. So there are two combinations. So Japanese entertainment and digital property is also a prospective. And some entertainment business may be benefited from the generative AI for creating their contents and also creating some characters or like that. So fundamental focus is still same. The sales growth and margin attractive, most observable ROIC spread. And also, I also considering about the standard deviation of ROIC in the trading performance. The ROIC also can absorb the some fluctuation of the 1 sigma normality fluctuation and also WACC, weighted average cost of capital. The constraint is that the English disclosure is fairly available. Some of the financial result is distributed in the same day, both in Japanese and English, and also some important material information is also available in English. And the affordable price, less than 1 million JPY unit purchase, investable scale is bigger than 100 billion JPY market cap. Coverage more than 3 analysts is also important for the efficient pricing in the market. New stock pick is like that. Sanrio. I predicting that Sanrio is a candidate of the next portfolio in last quarter sessions, and Sanrio, Bandai Namco, and Fujikura are 3 candidates for the new portfolio. But I choose the Sanrio because the sales growth is very attractive, but the gross profit operating profit margin is really attractive. And ROIC spread is also attractive, double digit. By current, this consulting firm, and Raxus is also is a corporate back office services. The exteriors, I picked the path in the past, is not performing well, but there's a ROIC and gross profit margin improving. And Kioxia, a newly IPO company, but they are reported that the strategic alliance with NVIDIA, plus Alpha Consulting also past pick stocks are returning it to in the next candidate. Most quarterly financial result of the candidate is like that. Sanrio is surprising sales growth, with operating profit also improving. But current LUX is also a very growing trend. Unfortunately, Dexter's Kioxia is in the first quarter 2026 is not performing well in the sales growth. But so I will explain why I choose in the next slides. But Alpha Consulting is sales growth is very attractive, and also operating profit margin improvement is also attractive. So net income is also grow fast, more than the sales growth. And market evaluation is like that. So there is a very attractive target return. Sorry, I don't have the capacity to individual stock modeling and evaluating the targeted return of the in our research capacity. So I incited Bloomberg target return and also Bloomberg target medians and target return from the price of September 6th. So Kioxia is now raising more than 6,000, and so this is no informative price, but and also the analyst target price is not following what catching up. So I have to think that, but it's very, I think that it's prospective for the business. And plus Alpha Consulting is also moderate performance and narrow margin for the highest return. Moderate return with lower or mid target. I have to say that this target return is the current price versus lower of target return or target median return. So I have to see. I try to see the company description first. The Sanrio is IP holder company with charming childish characters, but it's familiar with both the Japanese market and Asian market. Living is composed of both selling goods and amusement park ticket. It's like Disney and Disneyland. So this targeting our revenue is very attractive. This is BVD target. And let's see that by current consulting, this is general strategy consulting company. So they dispatch a consultant is like a de facto professional staff dispatching agent. So strongest growth of sales and transaction margin with venture cultures. So I see that the consulting firm is like Accenture's see as a dispatching company of the staffing company of some professionals. So they are very increasing. So they're the supplement for the shortage of laborers. So this is focused on the labor market. The RAX is also a back office SAS company, software as services, company for middle and small companies. So they are starting to develop AI application for their services. They also have a strategic partnership with Alpha Consulting. So their lack focus is the labor market and also corporate expenditures. The actually ours. They are filmmaker for automobile windows and smartphones. They are chemical and raw materials, and also some equipment or suppliers. So certain supply of optical receiver for data center server photonics. It may be used for advanced computing. So there is some focus on silicon photonics. So in the data center GPU and data center computing, there's the optics of receiving the optics, and some of the signals are distributed as some of the signals for transmitting the data being substituted by the optics or some brightening from the electricity signals. So and some receiver photonics and computer chips is including in the same chip like a system on chip. So this is one of the trend is followed by the NVIDIA and also by the Broadcom. So silicon photonics is one of the hot topics for the data center computing. They are starting to supply an optical receiver, and their film making business is also applied for these optical receivers. This is perspective. Their targeting is really conservative, or even gross profit is improving, but not the sales is not growing. But there may be may create a surprise if the data center product sales is growing than market expectations. So Kioxia is a divested company to Toshiba Holdings. they are newly listed at December 2024. The company of flash memories is called a solid-state drive supplier for both consumers and industries. Consumer end goods like personal computing and also for the servers. The reported alliances with NVIDIA for starting supply data center SSD by 2027. This is 100 times faster than the conventional storage, and even faster with the DRAM. DRAM is a memory, like a high bandwidth memory, is also including the DRAM. So SSD may be a sub complement of the DRAM, and their competitor is Samsung. Plus Alpha Consulting is going back to the candidates of the newly picked stocks. So consulting company for human resources and training and back office business process. There is strong sales growth appeared in the last 3 years, financial years. Also expecting the growing faster in the targeted level on the next September's. The strong sales growth and attractive margins also there have appeared in this graph. So third party with RACs, the focus on the corporate investment and also for the back office and making efficient business, also for labor market. Let's see the current financial result of these stocks. Let's see. Yeah, sorry. I show you the last slide. There's a lot of improvement in profit margin and also some sales growth. The Dexterity Kioxia is also decrease on the sales and also profit efficiency is depreciating, but we expectation of the surprise maybe some point of the purchasing it. The Kioxia is now appreciating too much, so this current price is not informative. Sorry for that. So monthly valuation and so like periodic performance is like that. So periodic risk is Sanrio is very prospective, but its risk is very high, and it's surprising that at the 2024 fourth quarter 2024, its average return and the average risk and standard deviation is almost same 1 by 1. So the Kioxia is growing, appreciating too much because of the reported NVIDIA alliances. The XTRs is also going back to, and if the some and their return at the third quarter of 2025 is moderate, but if some surprise in the optical receiver is observed in the fourth quarter, it can create a surprise. So let's see the trading performance is like that. There's no data for Kioxias, but let's see the annual average return. That quarter is very prospective in these Sanrio Bacon racks and Dexterias. For the strategic concern because of strategic alliances with racks, maybe it's cat last for 3. Sorry, this is not. So their return is reverting to the average of the racks and Prasad constructing. Let's see some information about that. So I have to notice that my announced sector explanation and choosing stock is some gaps. So I said something prospective comments about some industries, but it's not fully reflected in a stock pick because of the ROIC spread. The margin criteria is that affordability of unit purchase may drop some prospective investment opportunity. I choose Fujikura last quarter SSP, but it's dropped because exceed its purchasing unit is exceed 1 million JPY. But Namco is also dropped as a candidate because work spread did not meet criteria. So I have to say that true exposure for semiconductor may preferred for Japanese stock portfolio, like the creation devices for the creating the chip creation and testing device for chip creation, because the TSMC reduced weight on Japanese factory production. So it's end of the, I don't prepare end of the remarks by this, but I have to say that there's a lot of macro powers is not reflecting the market, and so shortage of labor, and they're more focused on the B2B, maybe next 12 months investment corner next 12 months industry. Thank you so much for watching. Now turn to the Q&A sessions. So let's see some questions. We see that the webinar chat, Planet. So let's see the Q&A. Where is the Q&A? Let's see the chat. The webinar chat is a lot of webinar chat. I see that there's a lot of Q&A. Q&A? Where's the Q&A? Here, sorry. Let's see, Mr. Jonathan Lim. Are there any stock under your coverage that you think could see activist involvement? I see that there's a lot of in my cover stock in the stock selected portfolio. There's activist no, I think that is not activist involvement. So, and see that the Nikkei seems to have already exceeded its 1989 peak. Do you think there is still room for the index to move up? Perhaps we'll see a correction over the next 6 to 12 months. I see it's difficult to, but I see that it's because of the lot of JPY depreciation, affected by the JP depreciation and expectation for the industry, and compensation for the JPY depreciation. It's compensated by the stock index increase. Yeah, I see that there is some correction, but I expecting that the JPY depreciates further, even if the Japanese government intervened to the currency market. I see the effect is temporary. They have to correct the trend of the depreciate the interest rate rise of the long-term interest rates, and stopping the quantitative easing, stopping the monetary easing policy. But some political pressure is reflected in the stock market, and also they may compromise, and some the difficulty that they see that some capital slackness is a source of the deflating pressure. So, but in the current situation is similar to the deflationary era of the Shirakawa governors. They're deflation, but deflation is not work really bad. It's not good, not so much bad. There is similar situation that inflation is affecting, but not deadly. So the keeping the policy rate, keeping the same policy, keeping the rate is fairly better than relatively better than changing so much. They may choose like that, and for such a compromise, may further depressing JPY, and also some index also appreciating the at least the next quarter. But we see that some Japanese corporate also having less purchasing power because of JPY depreciation, and the decrease of purchasing power may reflect in their net income, and the income decrease. They may see that if the currency depreciation is not no advantage for the Japanese company. They have some correction for the index move up. Thanks so much. This is my answer. So thanks so much. Next question. I'm sorry, I can't I can't correctly read your name. Strubekma Trobegen Dam. Sorry. Is there any index ETF for Japan indexes like Nikkei 225, Topic Core 30, or Topic License? Sorry, I know well cover about the ETF of the ETF market. There is some. I'm sorry, but please ask for the Philip sales for starting for the ETFs. I'm really sorry. Thanks so much. So next to Jonathan Lim again. See you again. So as sort of any other teams, here cooperation funeral homes, Kirby, Otis Management recently bought. This is you listed some activists. So Sony and the recent spin-off. Yeah, Sony recent spin-off is a fair. I think it's a very fair dealing for, and it's very. So there's some tendency about the corporate inefficiency and also parent listing or pressure for dissolving the parent listing, and also for some grouping the investment pressure for single business or some dissolving the conglomerate discount. This and Sagami Lover, I'm really sorry, I don't cover about that like that. About this. Toei Animation, I think it's one of protected company, but it's because it may be true for the ROIC criteria, but the Toei is also having a good prospective pressure for utilizing the intellectual property and some providing distributing the nice contents. So I'm sorry, I cannot free any of these names. I'm sorry. I cannot fully covering these topics. Thanks so much for asking. So Mr. RY or Mr. RY, I don't know. Tomiki-san, where or which year will be the next PM election, prime minister election? I think that I forget the next exact date, but within this quarter, within this month, I think so. Thanks so much for asking. Mr. Joel, all indexes and gold are moving in parallel until all-time high abnormal. This week seems demonstrate the sign of divergence and sell-off. What your quarterly out for Nikkei topics? Well, this Nikkei trend is created by the political pressures and prime ministry elections, and also there's some remarks about their policy manifestos. So I think that the politics may compromise and no policy maker make them making policy as they manifested, exactly as they manifested. So I think that some compromise for the policy because of some they failed to make a coalition for the Komeito or like that. They have to make compromise, and compromise within use for correcting the Nikkei topics. And also the Japanese currency depreciating trend will be corrected by the. So this is some chicken race that the BOJ may compromise, or the Japanese government or new governor of the Takaichi-san may compromise for their policy. And if the successfully compromise, BOJ can successfully compromise Takaichi-san, Sane Takaichi, maybe JPY appreciating back to appreciation, and also Nikkei some correction. Our topic is at a fair growth trend. I think so. Thanks so much. So don't think we need to spend too much time on macro media when in macro hedge fund. Can you spend more time on market and research? Don't think we need to spend too much time on macro. We aren't the macro hedge. Well, so you're Mr. Edifi. So I always catching up the some BOJ policy because I think that the market participants are not correctly capturing the monetary policy. I think that there is some opportunities. I in last quote in last sessions I stressing that the uh, monetary policy is not a temporary adjustment tool for business cycle. They are in they have to be in the policy rule. But market participants not capturing it correctly. They still see that there is some policy adjustment in accordance with the business cycle. This is so this kind of the uh, misperception is, I think it's opportunity. So that's like why I choosing topics for the BOJ policy and some Fed policy in every session. Thanks so much. In the GDP, Japan today to much higher than the 1990s. Compare the total market cap, the ratio increased to a better level. Where in Japanese in 1990s, there's a corporate inefficiencies. Think that there's a bubble in the bubble, starting the bubble, or there's a lot of the inefficiency in capital. And before the bubble sparks, there's a lot of corporate expenditures, but their household consumption not is not growing well because we see that there's a current account surplus. Japanese people exporting abroad but spend less they're importing. So their the current so the bubble is created by the corporate transactional stocks. It's similar in the current US semiconductor industries. So I think that the corporate action is going to be fair in this trend. Maybe the market is market maybe are hitting too much, but I think that in every ratio in the ever level, the Japanese stock in Japanese economy is going back to more efficiency for the shortage of labor being supplemented by the some technology improvement. I think that, but I think that the low policy rate or low interest rate maybe the complement of maybe a background of the wage decrease. So because of the input, the corporate input is the production input is labor and capital, but uh, and what and capital cost. If the capital cost lower, the cost of the labor is also decreased. Low interest rate combination low interest rate is the source of short the lower wages, and so lower wages not going to it's going to the smaller consumption. So if the government can dissolve uh the the, the indebtedness in and the interest rate rise in a normal level so that the government can pay about even the higher rates. So the latest phase in capital cost phase, so the cost of labor also rise. So if the labor market improves, the consumption also improves, and Japanese going to a better level, and also such a cycle is going to the more better market cap. Okay, thanks so much for asking. Sanrio his character is her. Yes, Sanrio is one of the Hello Kitty is one of the Sanrio's character. Sanrio's good IPs, prospective IPs. Thanks so much for asking. Could you mention the recommended ETF name again? I'm sorry, I'm not covered ETF, but sorry for asking. Please asking for the sales team of the Philip Securities. Sorry, I can't recommend ETF. Your opinion on JX? Yeah, this is called JX Matter is a newly listed company this year, and JX Hindok is one candidate I see, but there's a lot no sufficient data for recommendation. I see that they're dealing with the coppers and copper. Their copper is also important for making the substrates of the chip making. Also, some bonding. They're also important for bonding of the chip making. Also, some system on. They're the important material for system on chip of the advanced computing. Thanks so much for asking. So, Miss Minton, sorry, is topic on Nikkei index better to buy? You think have any ETF on either on this? Missed it. I think that well, this is Japanese last quarters or last 12 months, Japanese ETF, the Japanese index is no performance is good, but nobody compensated for the Japanese depreciation. So you must be hedged for the currency, and if so, that it may be. And if you want to cover the small and mid business, the topics is better than Nikkei. Thanks so much for asking. So we'll be able to trade in a growth market in Japan with signs 3134 JP. I think what's the 3131? I cannot answer with the top stocks about the change with Hamid Corp. I don't know about that. I'm sorry for that. Thanks so much for asking. I think that I answered all questions. Thanks so much. So this is end of the session. Thanks so much for watching my presentation and also asking a lot of questions. Thanks so much.
Thank you. Thank you everyone for joining. Before we end the session, kindly fill in our feedback form so we can improve your experience with us in the future. And this webinar will also be uploaded in our PhillipCapital YouTube channel. Once again, thank you everyone for joining, and thank you, Ms. Misang. Hope to see you guys again. Stay tuned, take care, and have a nice day.